So we can see that in the closing range, we end up getting a break to a fresh all-time high. Again, we're in this bullish time frame alignment environment. The Nasdaq also pushed towards its recent highs. So the Nasdaq is very strong. The S&P is very strong. Now the market is getting exhausted to the upside. That's not a good reason to short the market. Saying that the market is now a bit stretched or it's moved a bit too much, it doesn't mean that it can't move a bit more. Just because it's, let's say, overbought or exhausted doesn't mean that it can't get more overbought and more exhausted before some better pullback. So that is usually not on its own ever a good reason to fade the market. Exhaustion alone is usually not a good reason to fade the market. You need other reasons on top of that. It's a good supporting reason to fade the market, but it should not be the only reason. So right now, as we head into the overnight session, we can essentially expand our resistance on the upside and take today's high into account. And, we can essentially make the zone 30 quarter to 37 quarter. And we have today's VPOC up at 53.27. So we'll keep an eye on that as well. And we are still, of course, in a bullish environment. The market's back at the all-time highs. It's obviously a significant inflection point. And, we may get some profit taking up here. It's possible. But again, I wouldn't want to just blindly fade the market just on that idea alone that, hey, we might get profit taking. Yes, we might get profit taking, but we also might get short covering. And we also might get another leg higher before we get a leg lower. So I think that, as we head into tomorrow, I think it makes sense to keep the directional view on the short-term time frame neutral bullish. I don't think that it makes sense to aggressively buy up here either. If I had to pick between buying or selling at these high prices, I would pick the shorting option, but I would want to wait for some sort of structural break. So here is what I mean. For example, on the smaller time frame, we have this, trend line developing, right? So if I wanted to take a trade up here, I would say, well, I'm not going to blindly fade the highs, right? Like, as long as this trend is holding, I'm not just going to think, oh, let me just fade up here and fade the next zone or whatever. I don't think that's a viable approach. What I would be considering, or what I'm open to, is to wait for the market to break the trend line and then bounce back up into that trend line or into the breakdown area. That would be a safer way to short the market. So if we are going to short the market, we want to wait for some sort of structural break, whether it be a trend line break, whether it be a balance area break, a support level break, but we want to see something. We want to see some sign that sellers are indeed stepping in. If we look at, for example, NQ, and we look at the profile for NQ today, you'll note that, it's very thin at the bottom, and we have, a couple of distributions through the day, but then we have this VPOC that is all the way at the top of the range. A lot of times, this can signify an upside move that is driven by short covering. Like, it's not that we had a ton of new buyers jumping in at 18,691. What's more likely is that we had a lot of short covering that took place here. So if the short covering is done, let's say if the short covering is out, right? Like a lot of people covered their shorts up here. And now the market starts breaking down. That extra demand that you get from shorts that are forced to cover is then already used up. Like that fuel that you have from the shorts, that gets used up. And that's why when you have this type of profile, which, in market profile terms would be a P-shaped profile, if you end up breaking the upper distribution, the upper balance to the downside, that is the earliest indication of bearishness. So in the overnight session, keep an eye on the VPOC from today in NQ. So keep an eye on 18,691 in NQ, and also keep an eye on the roughly 18,660 to like 72. If we start breaking below here, that will be the first sign that sellers are stepping back in, and that could then open the door for a pullback into, this breakout area over here. So we could pull back to, 18,577 to like 18,610 or so, and buyers may step in there. And if we take that out, then we can pull back to the next area of support, down at the 18,523 to 547, 48 or so. So, we can take it step by step at that point. But the main thing is that as we head into tomorrow, do be mindful of how the market is behaving at today's VPOC. If we're holding above today's VPOC in the NASDAQ and in the S&P, then we have to assume that buyers are dominant in control. So, looking at the S&P, you can see 53.27 is the VPOC for today. And if in the overnight session you notice that buyers are persistent and they are holding the market above 53.27, then you have to assume that the buy side is dominant and we can push to a new all-time high tomorrow. But if we notice a break below the balance or range that developed in the afternoon, so if we see a break below roughly 17 to 23, 24, that would be the first sign that sellers are starting to step in, and then we can pull back to, this intraday balance breakout area. So we can pull back to roughly 53.03 to 53.10, 53.11. Buyers may still be active there. If we take that area out, now we can see more profit taking. Now that's going to have a bit of a psychological impact to anyone who's holding a long, and you may see some more profit taking, and that can then push the market even lower. And anytime the market gets overdone to the downside, I would expect buyers to step back in because of the intermediate and bigger picture bias being bullish and the short-term bias being neutral bullish. The short-term bias being neutral bullish implies that buyers are dominant in control, and anytime we pull back into a good support zone, there's a high probability of buyers defending that zone, especially on first test. So right now, I think given that we are right at fresh all-time highs, you are going to have to be more dynamic in your assessment of which side is being dominant, because the intermediate time frame bullish bias is not going to be impacted by a 30 or 40 point pullback, right? Because the market is so bullish right now, and we've pushed up so much that even if we pulled back 30 points, that would make absolutely no difference to this bullish structure. It wouldn't impact it at all. So that's the challenge, that by the time the market makes a deep retracement, it'll look bearish on the smaller time frame, but it will still be maintaining bullish structure on the larger time frame. So right now, I think for day trading, you really have to be in tune with the smaller time frame. What's happening on the 5-minute chart? What's happening on at most the 30-minute chart? But that is going to be actually more relevant to us because the support that is built off of the larger time frame moves is so far away now that it's not going to be relevant in the moment. It's not going to be relevant right now because we need such a big pullback to make it relevant. So right now, I think you need to be quite flexible, quite nimble, and you need to exercise the option of not trading. Like, this is the time where you can get chopped up, where you might buy too high, and then there's like a 15-point retracement, which is nothing considering we're trading at 53.30. Like, what's a 15-point retracement? It's absolutely nothing. So it's a situation where, you buy too high, you're in a bad position, you short, at a high price, thinking it's good location. That's still not a good thing to do because bullish time frame alignment is in effect, and that's the challenge. That right now you can't really consider shorting like a fresh high. For example, if we break to a new high tomorrow, technically location is good because it's, a very high price, right? But because we're making fresh highs and because bullish time frame alignment would be in effect, the probabilities are severely against you. So you can't really short at good location technically. Like if a short does materialize, it should not be at the highs. It will actually be at a lower price because we'll have to wait for a structural break and then be open to the possibility of shorting. So I think this is going to be a more challenging environment. So if you are a new or developing trader and you haven't really traded a market that's making fresh highs, all-time highs, then you may just want to observe and take notes and use this as a learning opportunity rather than, actively trading it, because there are going to be more traps, I think, and there are going to be more ways to lose money in the overnight and tomorrow. And I think preserve capital. Like if the market doesn't offer you a good trade and you're not able to buy at a good price because the market's, trading at too high of a price, let it go. It's fine. It will sort itself out within 2 to 3 days, right? If you just wait 1 or 2 days, the market will develop new structure. It'll establish new zones that will be deemed to be good location under the new context, and that execution will have a higher probability of working out. So exercise your option of not trading. If the market doesn't present you with a clear opportunity, do not get sucked into a bad trade. Don't short too high. Don't necessarily buy on a trendline break either. There's again that's just the risk we have right now in the market, is that if you buy a pullback, that's definitely going to be at a very high price, and if it's following a structural break, then momentum could be against you. So that is a very challenging situation, and I think it just opens the door for traders to take a lot of small to medium-sized losses that then add up to like a 5 or 10 hour drawdown, which is unnecessary. Look, you can just sidestep it. You don't have to be actively involved in this. You can just sidestep it, wait for a better opportunity to show up, and then trade that. And because we're day trading, it's not like you're gonna have to wait weeks for that to happen. I'm talking like, you might have to wait like a few hours or like 1 or 2 days for that to happen. So it's not like we're sitting on the sidelines for weeks on end. I'm just saying, going to tomorrow, be more careful and allow the market to kind of, sort itself out, whether it's going to continue heading higher or if it's going to, break and it's going to be a false breakout or maybe a pullback. This is a riskier time to be trading. Today was good. Yesterday was very good. But I think tonight and tomorrow are going to be a bit more of a challenge.